All right, so what you're going to see now is we've assembled the panel, so I think pretty much the whole audience moved to the front. But what we're going to do is we're going to spend about, we only have 2 microphones, that's why I'm standing here without one instead of yelling from there. But we have 2 lavalier mics we're going to pass up and down for questions and comments. I have a whole bunch of questions that have come from the audience, so you will get answers to your questions. And just to keep in mind that when we're done, when you leave, during this session right here, it's hot coffee back there, first of all, but when you leave, if you can turn in your name tags and the evaluations right outside this door, okay, so just make sure we cover the housekeeping part. So I want to thank you all for spending this day with us today, and then what you're going to see now is, like Frank Sinatra always said, the best is yet to come. Now, everything that you gave as questions during the day, this panel of astute professionals are going to answer them for you. And we're going to start first with Tara Klutzy, our state auditor, who wants to make a comment to all of you, and then it'll be part of this panel so we can answer questions. So, Tara, I welcome you. It's great to have you.
Can you hear me now? All right, well, I just wanted to quickly just address this group, one, for coming all day and listening. And I just want to say, what you guys learned in a day was what I paid a lot of money for and spent 4 years learning. And so I don't expect you guys to walk away unless Paul Joyce wants to give us all a bachelor's of science and accounting. Maybe we can take the CPA exam next. But really, it's very overwhelming when you get it all in a day. But I think when you break it down, it's a lot easier than all this information coming at you piece by piece. Well, let's remember that we're all in local government finance to begin with, and a lot of us have mastered it. And I will tell you, it's a lot more complicated than GASB's and GAAP, in my opinion, and I've been on both sides. For one, local government finance changes every year, and if you have anything to do with property tax, then, and you're still here, then you just pat yourself on the back and know that you're going to be able to do this step completely fine, because usually you have maybe a week's notice when they put a proposal out to change the way you calculate property taxes. Well, in GAAP and GASB and FASB's, they actually give you a long time, like more than a year, to comment on changes to these laws, and you have a year to prepare. And so I will just say, when you got all this information and you're like, oh, you've got to implement it in a year, remember what you've already done and where you've come from. And just take it piece by piece. We're going to talk about the challenges and benefits later to moving to accrual and doing GAAP financial statements. But I just want to say they kept mentioning Allen County, and I just want to say Google is your friend. Okay, like I think I Googled some county in Idaho at the time, and it has just morphed every year since when we created the Allen County financial statements. So, this is a practice where plagiarism is not condemned. Actually, standardization is cheered, so it's okay to copy other people's work because they just want to make sure you're saying certain things in these statements. And so I'm hoping that when you walk away from this, just maybe keeping track of a couple extra expenses at the end of the year and some revenues at the end of the year, and then using the resources that you have, that you will know that you can do this, and it's not as big as it may seem like today. So I just wanted to say that so that you guys leave here not thinking that you need to find a new job, because you've done local government finance, you can do this.
Okay, so we're going to jump right into the questions that have come from the group, and I'll start with the first one that I have here. And Paul, this is directed to you. What is the legal standing of the State Board of Accounting? Excuse me. I'll stay in the middle. I'll be an Italian and walk around and move my hands the way I normally do. I'll stay right here. What is the legal standing of the SBOA in relation to the Indiana statute?
The legal standing, I hope I don't yell too hard, but there's actually like a couple different ways. It really goes how our statute's written. And it really starts with 511.1.2, which requires the State Board of Accounts to formulate and prescribe the system of accounting and reporting for all local governments. Then as you all know, if you deal with Indian code, it always goes to another one. Then it goes to 511.1.4, which says that the financial reports must be presented in the form and content prescribed by the state examiner. And then 51116 states that the SBOA is to formulate prescribed forms for their reports. And then as far as the authoritative part of it, it's the one everybody really loves, is 51110, which states that a public officer, which you are such as that, who fails to follow the direction, which is a directive of the state examiner, in keeping the accounts and offices, commits a Class B infraction and forfeits your office. So as far as where is the standing in law, that's it right there. It is it's my responsibility, my duty, and our departments to formulate, prescribe, perform, and how you do your work. And that's what we're doing here, and that's what we do through directives. And directives are something that we started writing a few years ago to make it very clear on what that direction of the state examiner is. So that's the answer to that question.
Okay, and I believe he answered it with this. I believe he answered the question I'm going to ask us since it was given to us. How can SBOA say GAAP is the law when the statute says GAAP modified?
Tammy can't answer that question, or I can answer, but modified accrual is not GAAP. Okay? Modified accrual is part of GAAP. Full accrual accounting is GAAP. Full accrual accounting includes modified accrual and cash basis accounting. So the law does say it has to be presented in GAAP. There is another part of it that says it has to be presented in modified accrual. I'm not going to say that it's worded the best, it's probably not. But modified accrual is part of GAAP, not full GAAP.
Okay, thank you.
If anybody has anything they want to add to that, they can.
I guess just to tie it back to everything you've learned today. Sorry. Just to tie it back to everything you've learned today, they showed the government-wide statements. Those are on the full accrual basis. The fund statements that you saw, those are on the modified accrual basis. They also talked about the budget to actual schedules. We budget on the cash basis in Indiana, so those will be on the cash basis. And then you'll have all the reconcilements in between. So I think that in order to satisfy GAAP, you can see that you have a lot of different elements that go along with that.
We've kind of, you want to have
This is the lawyer part. The State Board of Accounts is the administrative agency of the state that is authorized and empowered with the duty to interpret the statute. And so that's ultimately why the State Board of Accounts is able to say, despite the fact that the language in the statute is somewhat unclear, here's how we as an agency interpret it.
Thank you. I avoided this all day, but I need my reading glasses so I can read the question.
Say, Ernie, we really haven't touched on the investment community either, because in the long run, this is the right thing to do. You'll be in conformity with all the other governments throughout the country, and it's what the investment community is looking for. So ultimately, you know, there will be a return on this investment.
I agree. The next question is, can we continue to keep our books on cash basis during the year and convert the books to modified accrual and full accrual at fiscal year end? So anybody can answer that question.
Well, yeah, I guess I'll start with that. The answer is yes. You can maintain your books on the cash basis and then just do a conversion using some type of spreadsheet. Excel software usually works pretty well. The other thing you may want to do is create a separate fund, and you know, have a separate fund available so that you can track these expenses and from year to year be able to report them. Some systems will permit that, some may not, but, you know, that's definitely an avenue to go.
I have to disagree with Joe. There's certain accounts and balances you're gonna wanna convert to modified accrual, full accrual as soon as you can. Your typical receivables and payables are two of them. Otherwise, you're gonna have such an immense amount of work to do at the end of the year, you'll never meet your reporting deadlines. Now, one thing I agree with Joe that you could do offline, either in a separate fund or in Excel, is convert from the modified accrual to the full accrual. So go from your fund financial statements to your government-wide statements. But to go from a cash basis to an accrual basis, if you're any sizable entity, you're not gonna wanna save that till the end of the year. You're just not gonna get your stuff done. It's just gonna be an immense project. You're better off setting up a system and, you know, getting the software you need to record your payables every single month and your receivables. Maybe not all of them, but at least the standard operating receivables, get those going in your system. Or you're gonna be overwhelmed every year.
Yeah, I was just gonna echo the same points that Linda was making. Take on as much as you do, as much as you can when you do it. So the monthly, if you have subsidiaries for your receivables and you're tracking that, whether it's your utility billing, your payables you're putting into the system, capture as much as you can when you can. And then at year end, utilize the resources that you have. If you have a system, in your system, you can have a 13th period, you record cash basis throughout the year, you can post to modified accrual, and then reverse those out and get back to a cash basis system. A lot of systems will allow you to do that. Top side entries, if you have for full accrual in GASB 34, some systems have a 34 fund where you can post those entries and capture them in the 34 fund and spit out a statement. Or you can create, like Joe said, spreadsheets that accumulate that GASB 34 entry. So you break it down into components and make it more manageable.
So I'll tie a yes and a no question together and say both are right. The answer to the question, can you? Yeah, you can. Is it advisable? No, it's not. There are things you're going to have to do throughout the year that are going to be required at the end of the year to get this job done. And if you wait till the end of the year and say, I maintain my records on a cash basis, now I want to get my report out on a GAAP basis, you're going to be in a lot of trouble. You're going to have to get your actuarial studies done. You're going to have to get your fixed asset inventories done. You're going to have to look at your infrastructure. All these things are going to have to be done throughout the year. But can you maintain your records and do your accruals at the end of the year? Yeah, you can. Do you want to wait to do it all at the end of the year? I'm going to go with no.
Just keep in mind that if you're a school corporation, there is certain federal information that will continue to be required by IDOE so that they can report to the feds that must be cash basis. You will continue to budget on a cash basis until that changes, and I'm not aware that that's being looked at this time. Not saying it won't be, but so there are still needs for cash basis numbers as well. So you're going to be working in a lot of different worlds, and so there are modules that might benefit you, but that's why we're here today, is to start looking and thinking about what your needs are, where your sticking points are, but don't forget that you still have needs for some cash information that has to go on to the AFRs, the annual financial reports, whether you're, especially for schools, but even for the gateway information through DLGF and our office.
Can our financial vendors help with bits and pieces of this, or like Lau or Harris, or?
Absolutely, absolutely.
Is there like a training for them that they can, so they can write stuff into our programs?
Well, I mean, certainly they're at our conferences, and we talk with them quite frequently. We definitely could consider putting something together to for you and to invite them. So
I mean, I would hope your software vendors are asking what your needs are. I mean, that's important, no matter who your vendor is, what are your needs? They definitely are working for you, you don't really want to wind up with using a vendor of any kind that can't meet your needs. So that they've been well aware of these law changes as well. So hopefully they're modifying their programs to fit your needs. If they're not, I don't know that you want them to be a vendor.
And I agree with that. It's not your job to teach your vendor how to do the work. It's up to them to serve you the way you should be served. So I would say if they're not on top of this, you should be asking them why. The next question, I'm not sure if the answer will be the same if I ask the audience on the panel, but this question is there a need for a legislative fix in 2019 legislative session in order to align guidance and the statute?
I'm not sure, I'll answer that from my standpoint, but I don't, if somebody wants to expand on that, that wrote that question, that'd be fine, but where's the guidance in the statute differ? Does anybody want to? I mean, it's okay, I mean, you're good for that. But I'm not sure where the guidance in the statutes differ at. So from my standpoint, I don't know that there is a legislative fix that's needed.
Well, the statute says gap modified, and the directive modified word is not mentioned.
Yeah, and that might be one, honestly, as we
I
said.
think- I think the fact
I think that statute where it talks about gap modified, I'm lost at what gap modified is.
Yeah, so I think the fact that we're asking about it as people who are impacted by it,
I would definitely be supportive in cleaning that part up, to clarify where it was. I think what the intent back where it was trying to say that there will need to be cash basis and modified accrual basis in there. But their overall goal is that you do report in a gap-based format, which would be full accrual accounting.
I think a number of us have legislative advocates, attorneys that could help streamline and support your team on what maybe some language that would help be clear to us as school
I think
districts.
that would be a good look.
entity.
And I agree, and I think part of the thing is gap modified is not gap. So
Right. That was my bigger thing there. I mean, it is using terminology that's not real.
I think, I'll say your legal walkthrough on these other pieces of the statute, which, again, I may not have read, that makes sense. It's just typical thing of statute referencing other statutes, and then another statute being added, and there being a disconnect. I think that's where legislative cleanup is helpful, and we'd love to have that happen in this particular thing.
We'll look for that discussion and bringing the associations in on that just to get their input.
Okay, the next question is, will we need to change anything in our financial system by 1/1/19 to be able to report our financials via gap? Or will we need to pull more reports and figure what needs to go into the gap financial report?
Hello? So if you're a 12/31 year end, by 1/1/19, you'll have to be, that fiscal year, you'll have to be on the full accrual basis. So if there are things that are problematic within your system, if you're not capturing data by function, if you don't have the right number of funds, if you don't have the right amount of detail within your system, I would say that you should make those fixes before the start of that fiscal year, so that once information starts coming in, you have the data in the right format. Additionally, you have to create an opening balance sheet. So as of 1/1/2019, that is the start of the fiscal year that you'll be reporting on full accrual. You'll have to have balances on full accrual as of that date. So stuff like that we've all been talking about, payables, receivables, fixed assets, debt, all of that information as of 1/1/2019 is going to be needed. So it's going to be needed as of the beginning of the year. And the best time to start accumulating that is before the end of the fiscal year 2018. So there's not a lot of time left on the calendar, and we should really get moving on, looking at our accounts. Do we capture the right information? Are we set up to report by function? Can we, match our revenues by function with our expenditures by function? Do we have the right number of funds? And do we have the information for the opening balance sheet? Do you agree?
Oh, it's okay with
Just,
the mic, right?
just testing.
Yeah, I was just, oh, there we go. So, to Joe's point, so you're gonna need those opening balances to be able to report at the end of 12/31/19 for that year. So having those processes in place, knowing that you have the fund structure, the account structure in place in order to pull that information together. But you do have, time to build those balances as of 1/1/19, those opening balances that would be part of the what's the audited financial statements for 12/31/19 fiscal year. So just wanted to clarify that, right?
Did that answer your question, the person that answered it, or does anybody need to follow up on that question? It is a goal, not only just to ask a question, but to try to make sure that the answer given is one that gets understood by everyone.
Yeah, that's a great point. So please, anytime you want, before I ask the next question, just stop me and say, you didn't answer my question if we did, okay? The next question is, will the State Board of Accounts, or so many acronyms here, DLGF, which I believe is Department of Local Government and Finance, right? Of funding, is it finance or funding? Finance. So will the SBOA of the Department of Local Government and Finance give us a template to provide the information? Currently, we input our financials into Gateway. I realize we'll be pulling more reports out of our system. I would really like to see a format for us to use to create a gap financial statement. And anybody? Chase?
So, can you hear me? Myself and Nikki Nip, mostly Nikki, have been working on a manual or a guide to include on our website and Gateway. So what this guide would include would be examples of what the financial statements would look like, MD&A, examples, what your no disclosures could say. And so that would be kind of our template. We won't give you something to plug into Excel the first go around. So anything you don't see when that's released, I think December 15th is when we plan to release it. Please give us feedback and we can try to give you more guidance at that time.
I'll just expand a little bit on Chase's answer. It will be a financial statement that you hand us. It won't be something that gets generated for you when the auditor comes in. That information is not going to be in the Gateway at least by 1/20. And even after 1/20, it's a complicated thing to try to write a program to produce gap-based financial statements just off raw data. There's going to be a lot of input, if not just because of the financial statement, because of the notes that are generated, and of course the MD&A that you put up in the financial statements themselves. So it is a lot more complicated than the cash-based financial statement that gets generated out of the Gateway today.
I believe this is a little different than, for local government. Generally, we would get a new law and then a state agency would tell us exactly how to implement it. And so I think that my advice would be, when January 1 comes, when you start receiving cash in the door or you start paying cash out the door, to start tracking that and what period it related to. Because if you're getting revenue that was earned in another period but collected in 19, that's going to be a receivable as of the beginning of the year. And if you're paying expenses that were for services that were provided for the prior year, then that's going to be a payable. And so you're just going to, what we did in Allen County is we kept our financial systems cash, but then we tracked our expenses and revenues for 3 months and just made sure that we were able to categorize what was considered a payable at the end of the year, and what was a receivable. And those are the big things that you can do. I think that a lot of the things can be done during the year, since this isn't until 12/31/19 when you're going in for it. But you're starting to think of any interlocal agreements that you might have that extend beyond a year, where people owe you money or you owe other people money. Like when go through your prior year expenses, are you making loan payments? Then there's probably debt that needs to be disclosed. Is somebody paying you back for money that you let them borrow? You just start looking at all your expenses, and your eyes are gonna open about, oh, I owe them money for the next 5 years. I better put that down. And so you just start collecting that information so that when it is time for you to convert to your accrual basis at the end of the year, you're going to have this information. And once you do it the first time, it gets a lot easier as you continue to go.
Okay, thank you, Tara. The next question is, if we report on a fiscal year basis, fiscal 1 year basis, and we budget on a calendar year basis, how should we present the budget to actual reconciliation?
It's probably the easiest answer we have all day. We don't know the answer to that. That's one we're definitely going to have to get back with you on. It's a real oddity. Some are on the fiscal year and other things are done on the calendar year. So we're going to be getting with the GASB on that to help get a clear answer from them. So it will be forthcoming very soon.
So to follow up on that, we budget on a calendar year, we do most of our financial on a calendar year, but we're audited on a fiscal period. So are we staying in line with the audit periods or with our calendar year budget?
You're in school preparation?
Yes.
And in this question, you're asking on how to present your budget to the actual?
No, I'm asking this financial statement that we're creating, is it a fiscal year financial statement or a calendar year financial?
In your instance, it would be a fiscal year financial statement.
Okay.
You will stay on your 6/30 report.
Okay, and as a second question to all of that, for us to be able to get bonds, do we have to have an audited financial statement in this format, or just do we have to have created the financial statement in this format to be able to get bonds?
You will, your financial statement will be an audited financial statement. As far as, I believe the way the bond should, you will need a financial statement that's prepared in a GAAP basis, and then it will be audited on a GAAP basis. So we won't audit a cash basis in your instance, we will audit a GAAP basis.
Sure, I'm just thinking about timing, so if we complete this financial report, but it hasn't been audited yet, because we're trying to determine when we're gonna take out our bonds and when we're gonna actually implement this, because we might not implement it right away because of the way we spaced out our bonds.
I mean, I would go that you'd say for you that after the year ends 6/30/20, right? Even after 6/30/20, as long as you're working and preparing toward them, the bonding company is going to, I think, realize that. It's really that's a bond question, I think, on how the bond issue is going to look at that. I guess. I mean, you're talking that gap of time between the time the year ends and you go for a bond, right?
Yes.
They're going to look at, I guess I'm boss on it. You're going to have it audited before
Currently,
9 months.
Currently, Form 9 isn't necessarily an audited statement. So with this document after we audited, it will be by bonds. That's
So if we wait until 2022, say December of 2022 to issue a bond, but we haven't been doing gap basis financial statements until fiscal year 2022. So it hasn't been audited yet. Is that going to be a problem? Does that have to
If
be
you
audited?
have completed it by the timeline that was issued within the directive, you'll be in compliance with it.
The financial markets are going to look at your most recent financial statement, whether it's GAAP or it's cash basis, if you haven't got that approved yet. The markets would probably prefer to see a GAAP, but if you haven't done GAAP, they're going to look at your most recent financial statement that's been blessed by the Board of Accounts. You're not going to be, the bond markets are not going to close you off because you don't have a GAAP approved statement. Now, if you don't have a GAAP approved statement, you may not be able legally to issue the bonds. That's a different issue, yeah.
I have a comment. It says in the directive that you just have to prepare it. So if you prepare it and then upload it in Gateway, then I would think that you could issue, and then those will be the statements that we audit next time we come in.
But if you let us know in advance when you plan to issue bonds, we will do everything we can to audit the gap ones so that the bond, the rating agency has the gap statement instead of the one prior to that as the last audited financial statement. I mean, we'd rather work with you to hopefully improve your bond rating and cost you less money. If you're going to go ahead and prepare it to meet this statute, we'd rather work with you and get the audit done too in time for you to go through your bond council and have that ready.
This is gonna move you extremely up on the priority list. The day you get yours done and ready for audit, we'll be coming in there to do your audit.
Oh, you will?
I mean, we're gonna move you up to the top.
I think there's a camera right there.
Anybody that has called our office in the past and says, I have a bond issue and I need an audit, we send a team in there to audit them.
Okay.
But most of the time, your stuff is not ready to be audited. If you need to have it prepared and hand me the statements, we will come in there and audit it. We can put that on that camera.
That's right.
Can't be a better answer than that. Hey, I want an audit. You make that phone call to me. Who wants an audit?
And Karen, since you jumped in on a couple of questions, just to let everyone know, Karen Allen from Ice Miller, I have a question for you. What traditional and non-traditional financing mechanisms would be available to upgrade our computer hardware or software to help us meet the new standards?
In part, it's going to depend on whether we're talking about purchasing new hardware, purchasing new software, or just spending a lot of money to have your vendor come in and completely overhaul your software and your programming. Capital financings, you can do lease equipment purchases through the Indiana Bond Bank, through a lot of local banks do that. There are financial companies like Public Finance that will enter into lease purchase agreements with you. They'll secure the equipment for you, secure the upgrades and lease it to you, and then you budget that as an operating expense. In selecting the equipment you're going to need or the software, you have to comply with the state purchasing statutes, and most of you are pretty familiar with that. If all you're doing is looking for a service, you don't need to bid that. You don't even need to obtain 3 quotes for that. If you're a local agency, you just need to comply with whatever your local rules are. If it's going to be a huge capital expense, you may want to issue bonds, or you may want to enter into a capital lease and have an underwriter buy the lease rental bonds. So there's almost an unlimited way to finance the purchases and the upgrades to your system.
Can I ask a question, follow up on that? If the local government, in the bond writing, wrote that they wanted to include in that bond writing enough, a certain amount to purchase equipment or whatever for this upgrade, could they include that within the bond writing?
Yes.
Okay.
Thank you.
I have is, will schools need to keep capital assets and amortize capital assets in their digital financial records for the purpose of GAAP? Everyone answer that?
If you don't have the information for capital assets and you need to track it throughout the year, then yes, you'll need to keep that. But if you can work with your consultant who deals with your capital assets to give you that at year end, then you can use that information to have capital asset numbers for your accrual statements.
How about conversion cost?
What do you mean by
So, capitalized capital assets.
Yeah, that's the question you want to
So
ask.
we don't have to keep them, we don't have to post depreciation entries in the general ledger, we just need to maintain the schedules.
Okay. That'd be part, going back to the question of, is it okay to keep your records in one basis and report them on another? As long as you're maintaining that information and you have it available at the end of the year, then that would be acceptable.
The next question, I'm actually going to tie two of them, and Tara, this will be for you. In Allen County, officials voluntarily made the decision to change from regulatory reporting to GAAP reporting years ago. What would you say were the largest challenges and benefits of moving to GAAP reporting?
Well, I'll start with the benefits, since we've talked a lot of challenges. I think just coming into Allen County, I think the benefits right away were just, it provides a better picture of the overall financial position of your county. And when you have that better picture, more accurate picture of your assets and liabilities, then all the decision makers in your county can make better decisions. And so we'll start right away with the people that we really haven't talked about, which is if you're a county councils, county commissioners, if you're a city, your mayor, and city councils, if you're a school, your school board, and your management team. I think a lot of people don't realize that sometimes they make decisions that have future consequences, or they don't realize what the current cost of some of the decisions and the benefits that they're offering today, what that means today on your financial statements, and what it means for the future. And I think that one of the benefits is knowing that before you proceed or make another decision. And so I was always a fan of at least putting the information out there. I wasn't a decision maker myself as the Allen County auditor, but I was able to put that information out so that our stakeholders could make better decisions. On the other side, we have heard about bond buyers and we've heard about bond rating agencies and investors. It's the same information that they want to make when they're choosing whether or not to invest in our bonds and buying our bonds. It may incorporate to a lower interest rate, but that really is only going to happen if you've made wise financial decisions along the way, right? Because it could do the opposite if you haven't made wise financial decisions and all of a sudden you have to throw a bunch of liabilities that weren't on there before. And so, but the point is that everybody should know exactly what financial picture you look like today so that we know where to go tomorrow and we don't need to kick this can down the road. I think that the challenges are having to spend money, at the very least, on an actuary, because most units that I know have more than just NPERS or PERF or TURF, which that actuary has been paid for and it's kind of part of your 11.2% contribution rate. If you offer any retiree benefits early or an early retirement incentive, all of those will have to be valued by an actuary. And you can find some decent ones, but that's going to cost a little money. The other piece is, do you need to hire somebody to compile your financial statements for you? Or is there, maybe you only have to do that temporarily until they can set up the templates for you and then you can do it going forward. Or you can just try to do it going forward. I mean, at the worst case scenario, maybe you didn't do it right the first time, but it can just get better. Like I said before, I had never put a full financial statement together, so I just started using Google, and honestly, we all need to learn how to use Google because you can find bad information or you can find good. But if you learn how to weed through and find exactly what you need, it can be very helpful. I'm not talking about fake news, right? So I'm talking about legitimate examples are out there that we can use. The other part of one of the challenges is the lack of understanding of benefits. A lot of people don't understand the benefits, so they want to fight you every tooth and nail because they don't understand that they could have better information to make their decisions. But once you turn it back on them and tell them, no, this is for your benefit, this is so that when you make your next decision for my city or my county or my school, you know exactly what position we're in right now. The last challenge is purposeful or willful ignorance and not wanting to know, because they just want to do their own thing and they don't want to know what the future is. And that, unfortunately, is a challenge to putting your financial statements in GAAP. Because if they are the purse string holder, then they are the ones who control whether or not you get the resources to convert your financial statements. So that's what I would say.
Well, I guess people are concerned about your health, because here's two of the questions. Is that how will SBOA be available to conduct and complete the audit by 11/30/20, which I think would be the schools, and the other one will be, how will an entity get an audit done by 8/15/20 if the fiscal year end ends June 30th/20?
Well, I think that's understanding the timelines, and I'm actually going to let Chase go over the timelines on that. But the 11/30 isn't a completed audit by us having it done. The 11/30 is, for a school, is you having the records ready for an audit by 11/30. So having the records ready for an audit and completed, and audit completed are two different issues. But Chase is going to go ahead and go over the timelines real quick, so everybody understands then the difference between schools and other entities that go. Okay, Chase.
If you would turn to page 7, they have the timelines in the PowerPoint.